The price of Ripple's native token, XRP, has seen a surge of 15% over the last 7 days and nearly 16% from what it was a month back. A lot of activity around XRP has been seen on South Korean-based crypto exchanges. XRP has had a substantial portion of total trading volume on Upbit and Bithumb. This is likely due to the phenomenon of kimchi premium, which is driven by a high demand for cryptos in South Korea. However, it has been suggested that some of this demand is driven by schemes such as pump and dump and wash trading. Following the peak on 29th of March, XRP's price dropped 8% and the number of long positions taken for the coin steadily decreased. This highlights the importance of market manipulation in XRP's price movements. This article provides an insightful analysis of Ripple's, XRP, recent surge in price and the surrounding activity on South Korean exchanges. It considers the potential influence of the kimchi premium and the possibility of market manipulation through wash trading and pump and dump schemes. The article also points to indicators such as the MVRV ratio and long-shorts ratio to further support this analysis. Overall, the article is a comprehensive look at the current activity in the Ripple, XRP, market. The recent banking crisis has reignited interest in cryptocurrencies, with Bitcoin's price rising by 70% in the first 3 months of 2023. Analysts at Bernstein have noted that the world is at a pivotal moment in the path to hyper-Bitcoinization. Analysts at Elliott Management have flagged the Federal Reserve's monetary policy as a possible cause of hyperinflation. U.S. Treasury Secretary Janet Yellen has promised that all bank deposits will be protected by the government. Meanwhile, Bitcoin's decentralization is being seen as a distinct advantage by investors. This article discusses the recent bank crisis and its potential repercussions on the global financial system. It highlights the recent surge in the Bitcoin price and suggests that this could be the start of a quantum leap in the crypto market. Additionally, it investigates the potential implications of the Federal Reserve's ultra-loose monetary policy and the U.S. Treasury's promise to protect all bank deposits. Finally, it points to Bitcoin's decentralization as a distinct advantage that is drawing investor interest in the current climate. Overall, this article provides informative insight into the current state of the global financial system and the potential implications of the bank crisis. Crypto hackers and scammers stole $452 million in the first quarter of 2023, a decrease from the $1.3 billion stolen in the first quarter of 2022. 6 flash loan attacks accounted for the most significant losses, with Euler Finance representing the bulk of the total. DeFi accounted for only 5 incidents but suffered the lion's share of losses at $336 million. $130 million was recovered from the exploits, with $129 million of that recovered in March. U.S. enforcement agencies are turning up the heat on crypto-related crime. This report from DA.fi shows that crypto hackers and scammers were able to make off with $452 million in the first quarter of 2023. While this number is lower than the $1.3 billion that was lost in the first quarter of 2022, it is still a concerning amount. The Euler Finance and Bbaco exploits accounted for the majority of the losses at $196 million and $120 million respectively. Smart contract exploits were the most common type at 17 incidents, and DeFi accounted for 5 incidents and $336 million in losses. While $130 million was recovered from the exploits, it still only accounted for 28.7% of the stolen funds. This report highlights the need for stronger security measures to protect crypto users from theft and scams. Additionally, U.S. enforcement agencies are turning up the heat on crypto-related crime, which will hopefully help reduce future losses.